Hey there, future homeowners! Are you tired of throwing your hard-earned money away on rent? Do you dream of owning your own place but think it's out of reach? Well, listen up, because manufactured homes might be the answer you've been searching for. These homes offer a path to affordable homeownership. But let's be honest, the world of loans for these beauties can be confusing as heck. It's like the financial industry took something simple and decided to make it as convoluted as possible. But don't worry, we're here to break it down for you. We'll arm you with the knowledge to navigate this maze and achieve your homeownership dreams. You deserve clear information and fair lending practices. We'll expose the common pitfalls and guide you towards the right path. By the time you're done reading, you'll be well equipped to talk to lenders and make informed decisions. Because owning a home shouldn't be a pipe dream, it should be a reality. So, buckle up, buttercups, because we're about to embark on a journey to unlock the secrets of manufactured home loans. Remember those cheesy infomercials promising the secret to easy riches? Well, this isn't one of those. There's no magic formula, but there is hard work, research, and a whole lot of determination. And with the right information, you can achieve the dream of homeownership. So let's get started, shall we? The first step is understanding exactly what we mean by manufactured homes, because believe it or not, there's a big difference between those and their cousins, the mobile homes. Alright, let's address the elephant, or rather the mobile home in the room. Many people use the terms mobile home and manufactured home interchangeably, but trust us, there's a distinction, and it's a pretty important one, especially when it comes to loans. Think of it like this, mobile home is so 1975. These homes, built before June 15, 1976, were held together by hopes, dreams, and probably a few too many nails. They predate modern building codes and safety standards, which makes getting a loan for them tougher than a $2 steak. Now, manufactured homes, on the other hand, are the cool kids on the block. Built after June 15, 1976, they're constructed in factories under the watchful eye of the Department of Housing and Urban Development, or HUD. Think of HUD as the housing police, making sure these homes meet strict safety and construction standards. This distinction is key because it directly impacts the types of loans you can qualify for. See, lenders, bless their cotton socks, can be a bit picky. They love their rules and regulations. And when it comes to manufactured homes, knowing the difference between pre- and post-1976 construction is crucial. It's like the difference between bringing a vintage bottle of wine to a party and showing up with a juice box. One will impress, the other, well, not so much. So, remember, June 15, 1976. The day the manufactured home industry leveled up. This date is your loan password, your golden ticket, your backstage pass to the world of homeownership. Keep it close, my friends. Navigating the world of manufactured home loans can feel like walking through a minefield. One wrong step and boom, you're stuck with sky-high interest rates, impossible terms, or even worse, a flat-out rejection. But fear not, intrepid homebuyers. We're here to point out those hidden explosives and help you sidestep disaster. Lenders, in their infinite wisdom, sometimes stumble over the nuances of manufactured home loans. It's like they're trying to assemble furniture with IKEA instructions written in Klingon. They see manufactured home and their brains short-circuit. Suddenly they're picturing rickety trailers about to blow away in a stiff breeze. One common blunder is misinterpreting the home's title. They might treat it as personal property like a car loan instead of real property like a traditional mortgage. This can trap you in a world of higher interest rates and shorter loan terms. Another misstep is overlooking the importance of the HUD tag or data plate. These little guys are like the home's birth certificate, verifying its construction date and HUD compliance. Without them, your loan dreams could evaporate faster than you can say pre-approval. But wait, there's more. Lenders might also trip over foundation requirements. A proper foundation isn't just about keeping your home upright, it's often a requirement for certain loan programs. And don't even get us started on land ownership issues. Whether you own the land or lease it can make or break your loan eligibility. The good news is that knowledge is power. By understanding these common lender pitfalls, you can be your own advocate. Arm yourself with the facts, ask the right questions, and don't be afraid to push back if you smell something fishy. Remember, this is your home, your dream, and your money on the line. Section 4. Loan Options Decoded, FHA, Virginia, USDA, and Conventional Loans Explained. Alright folks, let's talk turkey, or rather, loan options. Because when it comes to financing your manufactured home, it's not a one-size-fits-all situation. You've got options, people. Options that could save you a whole heap of cash and set you up for homeownership success. First up, we've got the FHA loan, backed by the Federal Housing Administration. Think of the FHA as that friend who always has your back, even when you're a little short on cash. These loans are perfect for first-time buyers, or those with less than perfect credit, requiring lower down payments and more flexible credit requirements. Next, we've got the VA loan, reserved for our brave veterans and active-duty military members. This loan is like a big warm thank you from Uncle Sam, offering zero down payment options and competitive interest rates. If you've served our country, this loan is a salute to your service. For those seeking a rural retreat, the USDA loan might be your ticket to wide-open spaces. Backed by the Department of Agriculture, these loans offer financing options for homes in rural areas, often with zero down payment required. It's like bringing homegrown affordability to your doorstep. And finally, we have conventional loans, the tried and true option for those with solid credit and a bit more financial wiggle room. These loans typically require higher credit scores and larger down payments, but they offer competitive interest rates and a wide range of term options. The key takeaway here, folks, is that you've got choices. Don't settle for the first loan option thrown your way. Shop around, compare rates and terms, and find the loan that fits your budget and your dreams. Remember, knowledge is power, and in the world of loans, a little bit of research can go a long way. Section 5, the foundation of your loan. Why a solid base is non-negotiable. Now let's talk about a topic that's often overlooked but absolutely crucial: the foundation. We're not talking about your favorite shade of makeup, but the very base upon which your manufactured home sits. Think of it like this: you wouldn't build a castle on a swamp, would you? A solid foundation isn't just about keeping your home level and stable. It's often a requirement for loan approval and can significantly impact your interest rates. Lenders want to know that your home is built on solid ground, both literally and figuratively. They want assurance that your investment is secure and that your home can withstand the test of time and the occasional strong wind. So what constitutes a proper foundation? Well, it varies depending on your location and the type of loan you're seeking. Some lenders might require a permanent foundation, such as a concrete slab or basement, while others might accept a pier and beam foundation. The key is to work with a qualified contractor or structural engineer who can assess your property and recommend the best foundation for your needs. And speaking of qualified professionals, don't forget about certifications. Lenders often require a certification from a licensed engineer or inspector, verifying that the foundation meets local building codes and HUD standards. This certification is like a stamp of approval, assuring the lender that your home's foundation is up to snuff. Remember, a solid foundation is not just about meeting loan requirements, it's about ensuring the safety and longevity of your investment. It's about having peace of mind, knowing that your home is built on a firm footing, ready to weather whatever life throws its way.